This is the Ellis Martin Report on Money Talk Radio. My guest now is Mena Habib, Managing Director and CEO of Power Minerals Limited, a diversified mineral exploration and development company focused on critical and battery metals. Power Minerals trades on the ASX under the symbol PNN and in the US on the OTC as PEIMF. The company's project portfolio spans Argentina, Brazil, and Australia, with exposure to a wide range of strategic commodities, including lithium, rare earth elements, niobium, copper, nickel, cobalt, platinum group elements, and gold. Metals that are central to global electrification, clean energy, and advanced technology supply chains. In this interview, Mena Habib discusses Power Minerals' exploration strategy, key projects, and how the company is positioning itself across multiple critical minerals jurisdictions. Mena, welcome to the program. It's great to have you and Power Minerals on the Ellis Martin Report. Welcome.
Thank you. That's great to be here.
If you don't mind, give us an overview of the company.
So let's start off by talking about our most advanced projects being the Rincon project. So that's next door to Rio Tinto, and they acquired that for nearly 900 million. And then we have our Australian peers, Argosy, and Argosy have a pilot plant there. Their resource is a little bit bigger than ours, but in terms of their market cap, they're currently at 200 million, where Power is at 30 mil. So a lot of upside, and we're looking to fast track to a pilot plant in the near future. Now that we have the resource, we're rapidly progressing towards that small scale production to catch our peers in Argosy. Then you look at our second project, so that's in Kawasi. We have a joint venture with a direct lithium extraction company in Canada called Summit Nanotech. They're well funded to come in and support us. We're next door to Ganfeng. Both our projects are next door to major players, which is excellent. And then we've got the Pecitos Salar, and that's kind of in between both. And what we're trying to do at Pecitos is build our lithium carbonate production hub. And what I mean by that is having a main plant there. We'll truck the brines from our other salars, being in Kawasi and Rincon, for final production at Pecitos. And the reason why Pecitos is so important as a production hub is you can have all the brine in the world. Unless you have the infrastructure being railway, electricity, gas, and water, you're not going to have a final product. So we're fortunate to have the excellent infrastructure at Pecitos, and we've got the brine elsewhere. So clear goal is to produce a concentrate, truck to Pecitos, and have a final product produced there, being a lithium carbonate product. And a lot of interest from offtake partners and so forth. So what we can tell our investors is stay tuned, but we will be progressing these projects rapidly.
Many junior mining companies in the lithium space have a very hard time because they don't have that infrastructure and nowhere to take that concentrate should they get it because of the infrastructure issues that are in place. You've mitigated most of that.
And what we've been able to do as well is move away from traditional evaporation, which you're looking at 12 months to produce a concentrate, to a more improved technology being direct lithium extraction. But in our case, what we want is to use evaporation to produce a concentrate on site, but the difference is that we'll then fast track and produce a lithium carbonate in a short period of time by running it through a DLE. But what I mean by that, we won't be evaporating for the 12 months. We'll only evaporate to a certain percentage, so 4%, which won't take that long, and then we'll use that product. So we're fortunate in that technology has transpired over the years, and we're now ready to work with that technology to produce a final product and unlock the true value of these projects. Because like you said, you can have all the brine in the world, but unless you've got the water and the infrastructure to support it, you're in the puna here. You're in the middle of nowhere. So yes, you can probably build a pond, but in terms of building a lithium carbonate plant, extremely difficult.
Now, you mentioned DLE, which audiences direct lithium extraction. It's a fairly recent technology, not that it was discovered yesterday. It has been around a while, and it is significant in that you can get that concentrate to the end users in the very near future. I heard you say 12 months. Is that correct?
So if you're using evaporation, that's a traditional evaporation ponds, you're looking at 12 months to produce a concentrate. If you're using DLE, you're talking about minutes to hours to produce that final product. So it changes the dynamic of lithium in terms of pathway to production. But what we're trying to utilize here is an evaporation to a certain percentage, which won't take too long, and then move that into a DLE, direct lithium extraction technology. So we'll have the plant on site to produce that final product. So We're using the evaporation because we know it works, and we're using the latest technology. So combining them is the best strategy for our projects. And every project is unique and every brine chemistry is different, but we've done the testing and this is what works for us.
At this point, you must be talking to offtake partners, aren't you?
Yes, we are. And that's been a discussion for a while now. And they're watching us closely, trying to secure long-term source of lithium carbonate. But from our end now, it's trying to fast track to small-scale production. What we're trying to achieve here is to prove up the process which we have. We've done it on a small scale, bench scale plant, but now we need to do it at a pilot plant level, and then we grow that. So these DLEs are modular plants, so you can build on them. You can put a plant to produce, say, 500 tons, build on that to produce 2,000 and so forth. So in terms of strategy, very clear. We're focused now on execution.
How are you capitalized in advance of an offtake deal in production? How are you capitalized to continue what you're doing at the moment?
So we are capitalized, and Ellis, when you look at what we've done, we've spent millions drilling and proving up the resource, and that's the most important thing. So luckily for us, that's all being done. What we now need is a partner that's going to fund to that and fast track to that small scale production. And we're in advanced discussions to combine our projects and have that one larger view, combining all our projects and Pasitos, like I mentioned before. Everything that we're doing in terms of the discussions are to ensure best value for shareholders. And we've made some changes recently by cancelling a joint venture. Yeah, potentially. I can always say potentially, table, but 59% at Rincon and project. But we walked away from that project because the discussions that we're having are going to deliver much more value. So we feel that we're getting closer, and yes, the market, just to stay tuned on that.
So you expect some kind of announcement this year? I'm not going to hold you to it, but you expect some kind of announcement this year with regard to either an offtake partner or some other sort of JV partner to fund and help you bring this forth?
So we've made it clear, Ellis, in our announcements that we are in advanced discussions. So hopefully that transpires. Obviously, I can say potentially, but it is getting closer, which is great.
Perfect. Let's talk about Brazil and niobium. You have a diverse portfolio, which I think is a smart move in any environment.
Definitely. And you're also looking at these critical minerals, which we're seeing on the news now, and how important they are with the changes that are having in the politics around the world. Everyone is trying to secure their source. This week, we saw Brazil and the US start to talk about rare earths and trying to secure a source. Obviously, you've got China, which are a strong dominant player. So it's an excellent position for us to be in discussions with a number of different potential offtake partners. What it means for our shareholders is it's extremely difficult to find these carbonatites with both rare earth and niobium. And it's proven up in terms of the mineralization. We drilled 2,000 meters recently, and we're just about to kick off another 10,000 meter campaign. So we've had grades up to 6% trio and just under 4% niobium. So these are high grades. We've confirmed mineralization. A lot of it is from surface and at depth. So this 10,000 meter campaign, we should have an MRE or a JORC. Once again, it's extremely rare to find these projects. If you look at our peers on the ASX, you've got St. George Mining. So their ticker's SGQ. 400 mil market cap. You look at Viridis, VMM, 200 mil market cap. Whereas we've confirmed mineralization at high grade. All you need now is to keep drilling. And we've only drilled 10% of this carbonatite. So we're miles off these guys. We've got the resource in front of us, and we're going to hit the ground running, hopefully kick off drilling any day now.
You have just recently, as of a few weeks ago, listed on the OTCQB, the OTC markets. What was the calculus behind that? I know I understand it, but I think our audience needs to know why that big move happened.
Definitely. The US has a clear focus on strategic critical minerals, and from our end, we feel that we could be a real player in terms of applying that demand and that deficit. So that was our core focus in terms of looking at securing offtakes in the US, and an opportunity for both our lithium and our rare earths and niobium. So I think we've got the perfect portfolio, the perfect minerals to align with the US. We're looking at a potential in future NASDAQ listing. I think we've got the assets, and with time, as we unlock the value, to prove up a much larger valuation and make that move.
So with the concentrate, you don't have to ship anything to China for refinement. You can ship it to the US, you can ship it to your neighbors in APAC and do business.
That's correct. The extraction for niobium and rare earth has been in the market for a while now, so we can produce that in country and then ship it off, wherever. And the good thing, and something that we've strategically thought, when we look at a project, we look at a project in terms of who are our customers. And South America opens up the door for the Chinese and opens up the door for North America and opens up the door for US and Europe. Whereas if you look at a project in Canada, you're going to be cancelling out the Chinese right away. And we've been very strategic in terms of finding these projects and developing them with a key goal in mind is to have a much larger pool of players.
So you're geopolitically agnostic, and you can be that way as an Australian-based company, can't you?
Definitely. And that's the real benefit of being on the ASX, and this opens up a lot of channels for us.
Everybody's friend. I like that. Mena, what would you say to investors listening to the program for the very first time as to why they should consider having Power Minerals in their portfolio?
So, Ellis, we're potentially extremely undervalued, and I make that remark in comparison to our peers. You've got St. George in Brazil sitting at 400 mil market cap. You've got Argosy with the one project at Rincon sitting at 200 million. It's the same brine chemistry. So we just got to follow the pathway in terms of what they've done. And we're doing that. You look at both projects, you've got a lot to catch up. And that's what I could tell the shareholders is there's a lot of upside with Power Minerals.
Mena, it's been great meeting you here on the program. I look forward to another conversation in a couple of weeks.
Thanks, Ellis.
I've been speaking with Mena Habib, Managing Director and CEO of Power Minerals Limited, trading on the ASX as PNN and in the US on the OTC as PEIMF. You've been listening to the Ellis Martin Report on Money Talk Radio. For more information, visit powerminerals.com.au. Power Minerals Limited is a paid sponsor of the Ellis Martin Report. I'm Ellis Martin. Thanks for listening.